Morning. Morning, you all right?
How are you, mate?
I'm not too bad, yourself?
You know, good.
Yeah. Bless you.
All on.
They're on.
Different day.
What a trip.
Yes.
Hour and 35 minutes.
Hmm?
Hour and 35 minutes.
Yeah, I can believe it.
Morning.
Right. And the meeting's now live, so we're ready to make a start. So if I can just commence the meeting, the first item on the agenda will be the election chairman, but I'll get to that in just a second. So good morning, everyone, and welcome to the meeting of the West Mercia Supplies and Pensions Joint Committee. I'm obliged to inform everyone that this meeting is being live streamed and recorded. So can I please ask that you ensure that all mobile phones are switched off, and I will now go around the room and ask officers and members to introduce themselves. And I'll begin. My name is James Walton. I'm the Executive Director of Resources and Section 151 Officer for Shelley Council and the Treasurer for West Mercia Supplies Pensions Committee.
I'm Councillor William Butler, Shropshire Unitary Council, Cabinet Member for Finance, Corporate Resources and Communities, prior Chairman of this committee.
Adam Kent, County Councillor at Worcestershire County Council and Cabinet Member for Economy and Skills.
I'm Barry Hanson. I'm the Head of Policy and Governance at Shropshire Council.
Jane Harrington, Tarleton Region Councillor, and also I'm the Cabinet for Finance, Governance and Customer Services.
My name is Councillor Ollie Vickers, and I'm the Cabinet Member for the Economy and Tarleton Region Council.
Good morning, my name is Pete Stoddart. I'm the Cabinet Member for Finance in Herefordshire Council.
Shelley Davies, Committee Officer.
Thank you all. So the first item on the agenda is to elect the chairman. So can I have any nominations for chairman for today, please?
You wanted to go again?
Yeah.
Can I nominate Councillor Butler, please?
Okay, are there any other nominations? Is everybody happy to for Councillor Butler to take over the chair? Great, thank you. I'll now hand over to you all.
Thank you, James. Item number 2 is apologies for absence. Is there still none received?
Yes, no.
Okay, thank you. Appointment of a vice chairman. So do you have any nominations for a vice chair, please? Probably won't ever have to do anything. I'll nominate. That's the thing. Do I have a seconder for that? Yep. All those in favour? Great, thank you very much. Right, item 4 is the minutes. To receive the minutes of the joint committee meeting held on 26 December 223. I've had a quick look through them. I can't see any issues per se. Assuming it's just you and I that were there.
I think it was, wasn't it? They're okay.
Does that still make us score it, Shelley? Yeah, that's okay then. We have to approve.
Yeah.
Yeah, approved. Thank you very much. Item 5, public questions. Any?
There's none.
None. No, great. Item 6, any pecuniary interests? I'd have thought there would be. No. Item 7, statements of accounts 23-24 and the annual government's statement. I'll hand over to you, James. You want to comment?
Okay. Thank you, Chair. So if I just give a brief introduction to for the new members in terms of the purpose of this committee, and then we'll go through again with each of the papers. So when West Mercia Energy was sold back in the year that's stated in the report, there was a pension liability relating to West Mercia Supplies, which was when West Mercia Supplies was sold off. The pension liability remained with West Mercia Energy. So what that meant was that all of those former employees who were no longer active members of the pension fund still had a liability relating to a pension deficit, and that would be paid off over a number of years, basically deducted from the profits of West Mercia Energy. So this meant that when the West Mercia Supplies part of the business was sold, a greater capital receipt was achieved for that sale because that pension liability wasn't sold as part of the sale. From the Joint Committee's point of view, from the owning authority's point of view, this was seen as quite reasonable because the actual liability pension liability payment was in the hundreds of thousands that would be paid every year, and the profits from West Mercia Energy would be more than sufficient to cover that. So effectively, it was a bit of a hit on profits, but fundamentally, each of the local authorities got a bigger receipt upon the sale. So that was seen as a good deal. What then happened, as that sort of worked its way through over the years, the fact that that pension liability sat on the books of West Mercia Energy, it meant that they had a negative balance sheet. So the organisation as it stands holds very little assets, and so therefore it was dominated by this pensions liability. So what that meant was, technically, the business was holding a negative balance sheet. When because WME applies for, responds to tenders and is applying for new customers all the time, there is sometimes a requirement, a yes/no sort of requirement within the tender documentation that says that the organisation has a positive balance sheet. So despite the fact that we can explain away why this balance sheet was the way it was, nevertheless, it potentially was preventing WME from tendering for some work. So a decision was taken that the pension liability would be split out from West Mercia Energy, and a separate joint committee set up which would purely manage the WMS pension liability in its entirety. So that's why we now have this short one meeting a year for WMS pensions, purely to go through the accounts and to set the parameters for the way in which that deficit is being dealt with within the four local authorities. So the first item to work our way through, there's only four, and the first item is the statement of accounts. So that statement of accounts is attached. What that statement says is basically the pension liability for WMS is pulled out from Shropshire County Pension Fund and is shown in its entirety within these figures. So there is no kind of other entries into those accounts other than the pension liability as it stands at this point in time, and the contributions that are made from each of the owning authorities and any payments out that are made as part of that. The pension liability is built up of the deferred pensions that are sat in there, and obviously as each year goes by, as more of those former employees start to reach retirement age and start to access their pensions or transfer out of the scheme, we would expect to see that liability, that overall pension pot, falling over the years. Since last year, we have seen the value of that liability fall, so that's in a slightly better position. We saw a big change last year as part of the accounts. And Shropshire County Pension Fund in its entirety is now 100% funded. That then varies depending on each of the individual employees within the fund. Some of them may be overfunded, some of them may be underfunded. There is still a liability sat within WMS pensions, but that is then dealt with, as I say, by liability payments from each of the four local authorities, owning authorities. So the accounts are what they are. They're very technical in the sense of they're purely the pensions liabilities, so they're quite difficult to get into. Nevertheless, it's there for openness and transparency, and what you can see within that is the debtors and creditors, the amounts owed or paid out in relation to the owning authorities' individual contributions. And those will then be gone into in more detail in the later papers as we work our way through. I'm happy to take any questions on that as necessary.
Morning, everybody. It's live.
James, just one question. So on page 10, it says the pension liability transferred on the 1st of April 2021 was 6.928. So that's the initial transfer in, is it? And then the balance as at 21st of March this year was 2.2156, whereas the year before was 2.843. So it's a decrease. So is that the figure that's come down from 6.92, or the number you just down to there? So looking at that level, if that's the outgoings going, there's not a lot left to actually go through. If they're decreasing at 600, you've only got about another 4 years worth of funding there then.
Potentially, I mean, the big factor within this is, as I say, each employer, so in effect this is an employer within the pension fund, has its own liability calculation based on the age profile, etc., of the employees within that. So at the point when the transfer happened, I think the overall pension fund was something like about 84% funded. So there was a big liability. Added to that, when the transfer was made, the decision was taken by the Joint Committee that the West Mercia energy element would be left fully funded. So there would be no liability from that. When you then produce that figure, in terms of the actuary calculation, you then have to add on a kind of an accounting calculation to make sure that there is no liability left with WME. Because that's an accounting calculation, that can vary quite quickly over time, and because of the move from about 84% funded to 100% funded overall in the fund, you'll see. So both of those factors are indeed reducing that figure down. So the decision that was taken by the Joint Committee last year was to pay the deficit payments upfront for 3 years. So that payment has gone in. So that all of these things are reducing that liability down. If the pension fund continues, and this is the fundamental factor within this, if it continues to perform really well in terms of the investment returns that it's getting, we would expect that liability to keep on falling. So the contributions being made in and the investment returns, it's set to repay over 20 years. It will not take that long on this basis, but we could have a stock market crash next year and we would be reset back, and it could go back to a deficit of 7 million or something else.
There's no impact to Herefordshire Council at all on this.
So all of that liability is sat within here. What happens for each of the owning authorities is that actuarial calculation is done each year, and then there is an employer's payment that's calculated. So last year, I think that figure was something like £400,000 that was for the 3 years that was calculated. So that's split between the owning authorities. So that element will sit with Hereford and each of the owning authorities. The difference is that risk, that liability, used to sit with WME. And what that meant was, although each authority wouldn't necessarily see that variation directly, they would see a drop in the profitability or the distribution of surplus that you would see as part of that. Now they're divorced, so each authority sees it separately.
I'll just add it to my conversation with Rachel next week. RS 151 officer.
Yeah, it just makes it far more transparent of what's actually gone on historically.
Thanks.
Welcome, Councillor Ross.
Thank you. Good morning.
Councillor Ross from Worcestershire has joined the meeting. Any other questions for James if we move on to the item 8, the liability charges? Everybody happy? Yeah, great, James.
Okay, thank you, Chair. So the liability charges is let's get the paper up. Sets the charges for the current year. The idea is that there were kind of 3 stages to this calculation every single year. So the statement of accounts is a fixed picture in relation to what happened in the previous financial year. In that previous financial year, because of the way that the charges are set, there is a possibility that each of the owning authorities may have overpaid or underpaid in actuality compared to what the estimate was for last year. So we look at that. We then look at what the estimates are for the current year in relation to the payments that need to be made, and then we look at the future year in the next paper. So in terms of this paper, paper 8, pension liability charges for 24-25, in section 6.3, there are 4 parts that make up the charges. So there is the deficit recovery payment. So this is the recovery of that deficit that we just talked about. That's the majority of that payment. there is part B, which is compensatory added years benefits. So under previous legislation, if somebody retired early, rather than a pension strain being paid into the pension to compensate the pension fund for the fact that that individual had left early and hadn't therefore fully funded their contributions, the legislation used to require that a calculation was done, and every single year going forward until that individual passed away, the owner, the employing authority, would make an annual contribution to compensate for the fact that that employee was no longer paying into the pension fund, was in fact drawing that pension. So that compensatory added years benefits is old legislation, and it will be here for as long as there is a surviving member who paid into that scheme in that way. So that's calculated. Section C is then the costs incurred by the legal authority. So Shropshire Council is the legal authority. We administer all of this on behalf of the Joint Committee. So what we do is each year we calculate and estimate what the administration cost is for actually managing that process. And then Section D is for any other costs relating to the pension, to WS pension. So often this can be things like when the actuary has to produce their statements each year, those costs will be included. So in terms of Part A, which is in section 7.1, as I mentioned earlier, the deficit repayment for the 3 years was made up front, so in April 2023. So there is no deficit payment to be made this year or next year on that basis. Section B is the compensatory added years benefits. The table in table 1 shows that last year the calculation was 36 pence out. So good news is everybody gets a rebate of 9p each in relation to that overpayment. The estimated charges for this year are £36,000 in total, which is just over £9,000 for each authority. So that calculation then gets carried forward. In terms of section 7.3, the legal authority costs, those are broken down in table 2, and as you can see, that total cost comes to £3,600. Table 3 then breaks down those costs over each of the owning authorities, but also takes into account the overpayment of just over £1,000 that was made last year. So the total cost for the local authority charges for this year is therefore £2,500, of which that means £634.82 for each authority. And then finally in section D, in section 7.4, table 4 then shows that the actuary costs were £1,000 this year. It tends to be a round figure. It's part of that overall actuary cost. So £1,000 for the calculation for WMS pensions, which is basically the basis on which the accounts are drawn up. So that's a £250 charge for each authority. So in section 7.5, all of those costs are pulled together, a total of just under £40,000, and therefore the charge for each authority will be £9,892.20. The section 9 then just talks about the payment mechanism. When we set up the WMS pension joint committee, it was really important that we transferred all of the liability that was sitting within WME into the joint committee, and that we didn't have any residual risk sitting with Shropshire Council. So the way that we tried to do this as practically as possible was we said Shropshire Council, based on the agreements that were made in the previous year, would continue to pay the costs as necessary for WMS pensions. And then halfway through the year, i.e. 30th of September, a calculation would be done. That's why this meeting happens just before the end of September, which is halfway through the year. So the calculation in terms of what that means for each authority is then submitted and agreed around about halfway through the year, and an invoice is submitted therefore to each authority. The requirement as part of the joint committee is that invoice is then paid within 30 days, because if it takes longer than that, then there is a financial impact that starts to build up on Shropshire Council. And in previous years, we have had to chase authorities to make sure that payment has been made. We're doing it this way to keep everything really simple and try and keep everything as practical as we possibly can. It means we have a single meeting each year. It's only half an hour. And as part of that, we only have a single invoicing run, which an invoice just needs to be paid within 30 days. So that's how we keep this as simple as possible. So I just urge members, if you're comfortable with this report, can you just ensure that that payment is then made within 30 days? And to remind you, that payment is under £10,000.
Right. Thank you, James. I think it's useful to have a good understanding of the report, and hopefully if we're all here this time next year, we won't have spent so much time on it. We'll have actually learnt the background today, if that makes sense. And obviously it's covering something that's historic, that's agreed between all the councils anyway. We have 2 recommendations in section 2. Do I have a proposer for those recommendations? Thank you, Councillor Kent. Any seconder for those, please? So yeah, happy to second. Thank you, Councillor Scott. All those in favour? Yeah, thank you. That's sorted. Right, we're on to item number 9, the policy decisions.
Thank you, Chair. So papers 9 and 10 are therefore quite simple. So paper 9 is just the policies for 25-26. So on the basis that the agreement's just been made for 24-25, effectively this then just sets out the policy decision for 25-26, which is in line with what we've just talked about in terms of 24-25. So I don't need to go into any further detail on that.
It's just housekeeping, basically, isn't it? Yep. Could we take item 9 and 10 together? Or do you want them separate?
No, can do. In terms of item 10, again, this is purely because there are changes in terms of membership on a regular basis, and we only have 1 meeting a year. So this is just the delegations. They're set out in Appendix A. This just means that the joint committee is comfortable that I am able to do the administration in the background to ensure that everything happens as necessary. None of those delegations have changed since they were set up. They literally come here every year, so everybody is completely clear as to what delegations are in place for me to follow.
I'm confident that we're doing it as economically and as compact as we possibly can for the benefit of all councils. So could I have a proposer for those recommendations? Thank you, Councillor Stoddard. Second. All those in favour? Thank you. Great. Date of next meeting will be held in September 2025, date to be agreed. I just wish all meetings were that simple.
Finish the live. Finish the live.
Sorry?
Finish the live.
No, we'll just switch to the live stream off in a moment.
Just get it on. Okay.